Good evening, students. I welcome you all in our capital gain fifth session. Today, we will be discussing the provision of capital gain, in which we will cover exemptions, which is most important to solve the question completely. There are technically two kinds of exemption under capital gain. One is based upon the income and the other is based upon investment types of exemption. So we will complete both kind of exemption today. But before that, of course, as I have asked you in the last class, so who would like to summarize the provision what we have discussed in our last session? In the last session, we have discussed slum sale provision, then capital gain in case of non-resident who purchased Indian company shares or debenture in foreign currency. Then we have gone through with the provisions of section 50C, 50CA and 50D and cost of acquisition in the special cases of section 112A. So these 4-5 sections we have covered in our last session. So Tanu wants to summarize those provisions. So Tanu, please go ahead. Kindly unmute Tanu. Okay, Divya also wants to summarize and Harshada also. So you will do one thing, Tanu. You will start explaining the provision of the first, that is slum sale. So you will cover slum sale provision in a summarized way. Then Divya, you summarize the provision of non-resident purchased Indian company shares debenture in foreign currency, as well as cost of acquisition in case of section 112A. And Harshada, you continue section 50C and CA and 50D. So first of all, Tanu will summarize the provision regarding slum sale. So Maniji, kindly unmute Tanu. Tanu, go ahead.
Okay, sir. Thank you, sir. In slum sales, we मतलब सर हिंदी में एक्सप्लेन करूँ?
Your voice is not loud, Tanu. थोड़ा जोर से बोलना पड़ेगा.
सर हिंदी में एक्सप्लेन कर सकती हूँ?
हिंदी में कर सकते, कोई इश्यू नहीं, आप हिंदी में एक्सप्लेन कीजिए, इट्स ओके.
ओके सर. सर अभी आवाज आ रही है?
आ रही है. आपको सेक्शन 50B समराइज करना है, स्लम सेल. ओके
ओके सर. सर स्लम सेल में हमने देखा था कि इसमें मतलब अगर कोई एसएससी है जो अपने पूरे अंडरटेकिंग को ही ट्रांसफर करती है, उसमें सोल एसेट्स को ट्रांसफर नहीं किया जाता, इसमें पूरे मतलब एक बिजनेस को ही ट्रांसफर किया जाता है इसमें. और इसमें हमने देखा था कि इसमें अगर हम मोर देन 36 मंथ के लिए अगर एक्वायर करते हैं अंडरटेकिंग को, तो इसमें हमें लॉन्ग टर्म कैपिटल गेन होता है. और अगर लेस देन 36 मंथ्स है तो इसमें हमें शॉर्ट टर्म कैपिटल गेन होता है. और अगर हम इसमें इंडेक्सेशन का बेनिफिट हमें नहीं दिया जाता है, और हम इसमें कॉस्ट ऑफ एक्विजिशन को कंप्यूट करने के लिए हम इसे फुल वैल्यू ऑफ कंसिडरेशन के लिए लेते हैं एफएमवी ऑफ कैपिटल एसेट जो ट्रांसफर कर रहे हैं, और एफएमवी ऑफ कंसिडरेशन रिसीव जो हमें हुआ है. और इसमें हमें सीए का रिपोर्ट लेना कंपल्सरी होता है. और अगर हम कोई गुडविल उसमें है और जो हमें सेल्फ जनरेट हमने किया है, तो उसकी वैल्यू को हम निल एज्यूम करते हैं. और अगर कोई डेप्रिशिएबल एसेट्स है तो उसका हम डब्ल्यूडीवी वैल्यू लेते हैं. और अगर कोई फिर उसमें से हम नेट वर्थ कंप्यूट करते हैं कॉस्ट ऑफ एक्विजिशन के लिए, और उसमें से हम अपनी जो भी लाइबिलिटीज होती हैं उसको डिडक्ट करते हैं, और उससे हम उस नेटवर्क को हम कॉस्ट ऑफ एक्विजिशन मतलब
यस, नेटवर्थ को कॉस्ट ऑफ एक्विजिशन एंड कॉस्ट ऑफ इंप्रूवमेंट मान लेते हैं. वेरी वेल डन.
यस.
Okay, Divya, now you will summarize the provision of section 112A cost of acquisition and non-resident TTBR provision we have discussed in a short way. Okay, so please
सर मैं
unmute.
अनम्यूट कर लूँ?
हाँ, आप खुद
थैंक
को
यू.
mute कर लीजिए. Divya will start explaining things. Divya, please continue.
Hello, sir. Good evening. Hello, sir. Good evening.
Good evening, Divya.
Okay, so uh, the provision of एक मिनट.
आपको हिंदी इंग्लिश किसमें?
Okay, so the provision of sir English.
Okay, continue.
I mean both. Okay, so the provision of capital gain for non-resident on shares and debenture in Indian company will be applied only when securities are bought in foreign currency, and the capital gain is to be computed only in foreign currency. The cost of acquisition will be the average of TTBR, that is telegraphic transfer buy rate, and TTSR, that is telegraphic transfer selling rate, on the date of acquisition. The sale consideration will be the average TTBR and TTSR on the date of transfer. Final gain is converted to INR, that is Indian rupees, using TTBR on date of transfer.
Correct.
And the section 112A deals with the taxation on long-term capital gain on certain assets. The certain asset hereby we mean equity shares in a company or equity shares in a company and equity oriented fund and unit of business trust. This mostly deals about the concessional rate, so it would be leviable when capital gain from certain assets exceeds the 1,25,000. If if we are transferring such shares before 23rd July 24, 10% will be charged on the amount exceeding 1,25,000. And if the shares are transferring after 23rd July 24, the rate will be 12.5% on the amount exceeding 1,25,000. For the shares acquiring before 1 2018, that is mostly deal with bonus shares, cost of acquisition will be higher of the actual purchase price or lower of the FMV on 1st January 2018 and sale price.
Correct.
Okay, sir.
Next section. Okay, you have explained both. Okay, the next section will continue by Harshada, and that would be section 50C, 50CA, and 50D. So you can mute yourself, Divya, and Harshada, you will explain. Kindly unmute Harshada.
Hello,
Hello.
am I audible, sir?
Yes, yes.
Good evening, sir. Basically, section 50C, 50C, and 50D tells us about the deemed value for value of the consideration for computing capital gains, and 50C section similar with the 43CA in the PGPP section, which tells us about the transfer of immovable property. And in sales consideration there are two types, you can say. The stamp duty value, if more than 110% of the consideration, then we will consider the stamp duty. And in case of stamp duty value is less than 110% of the consideration, then we will consider the sales consideration. But here in that case, the stamp duty, if we register through the electronic mode, they will consider the agreement date, stamp duty value of that agreement date. If we will received in cash mode, then we will consider the consideration.
Then we will consider stamp duty value at the time of transfer. At
the time of transfer.
Correct.
And another one is a real in case of a that wherein that real market value, wherein if seller is saying that he not sure about the valuation of that asset, then he can go to the court, and then stamp duty is FMV is less and stamp duty is higher. In that case, then they can go with the court, and court can refer the case to the valuation officer, and then he on that basis, like if FMV is more, then FMV and is more than the stamp duty value, then consideration will be stamp duty. And if fair market value is less than the stamp duty value, then in that case we will consider the valuation of the consideration given by the valuation valuation officer's report.
Okay, correct. And section 50CA.
CA basically tells us about the unlisted shares. Here in the consideration, if the consideration is less than the fair market value,
In case of unlisted shares, if the sale consideration is less than fair market value, then fair market value would be
that is the consideration.
correct. Then what is section 50D explain?
Yeah, 50D tells us about the computation sales consideration for any capital assets, wherein for transfer is in case of a consideration for transfer is not ascertainable or cannot be determined. So in that case, fair market value will be as on date of the transfer will be our consideration.
Well done, very good. Thank you so much, Ashada. Thank you, Divya, and thank you, Tanu. Well done.
Sir, excuse me, sir. Having some doubts regarding slum sale.
Slum sale?
Yeah.
Yes, you can ask.
So actually, basically three doubts: the land and building and plant and machinery. Basically, we are considering together, right? So, basically, slum sale is for one or two undertakings.
Yes, a complete undertaking, whether 1, 2, or 3, but we have to transfer the complete undertaking. Correct.
Okay. So in that case, land and building का जो consideration है, so that will be separate and plant and machinery का separate, or all together it will be the
ऑल टुगेदर देखो, अगर सपोज करो मेरी एक फैक्ट्री है, फाइन, उस फैक्ट्री में ऑफ कोर्स लैंड भी है, कंस्ट्रक्शन भी है, दैट इज बिल्डिंग पार्ट, मशीनरीज भी है, इवन फर्नीचर भी है, ठीक है, ये सारी चीजें उसके अंदर है। अगर हम इन सारी चीजों को सेपरेट सेपरेट वैल्यू पर बेचेंगे, लाइक फर्नीचर मैंने कहा 5 लाख रुपीज, बिल्डिंग कंस्ट्रक्शन वैल्यू मैंने कहा 50 लाख, तो स्लम सेल एक्टिवेट नहीं होगा, बिकॉज दैट वुड बी इंडिविजुअल सेल ऑफ असेट। उन सबका हम सेपरेट कैपिटल गेन कैलकुलेट करेंगे। बट अगर मैं कहता हूं कि ये पूरी फैक्ट्री, इसके अंदर जो भी है वो सारा मैं बेच दूंगा 1.5 CR में, नॉट एनी इंडिविजुअल वैल्यू असाइन टू एनी एसेट, तो स्लम सेल ट्रिगर होगा। तो हमारा पहला जो ट्रिगर पॉइंट है, जो एप्लीकेबिलिटी है, जो चार्जेबिलिटी है, कि स्लम सेल के प्रोविजन सेक्शन 50 भी लगेंगे कब? जब हम एक पूरी फैक्ट्री को, एक पूरी यूनिट को एक सिंगल प्राइस में बेचेंगे, चाहे उसके अंदर टेंजिबल एसेट्स हो, इवन इंटेंजिबल एसेट हो। मे बी आपने लास्ट वाला जो एग्जांपल हमने डिस्कस किया था स्लम सेल का, देयर वाज पेटेंट आल्सो, तो पेटेंट इज एन इंटेंजिबल एसेट। स्टिल स्लम सेल में कंसिडरेशन एक ही होगा, सारी एसेट का एक्यूमुलेट करके, तब
okay, even land immovable,
इंक्लूडिंग लैंड, बिल्डिंग, इंटेंजिबल एसेट, मशीनरी, फर्नीचर, एक्सेट्रा।
okay. And CA report is mandatory if like agar in financial report is there already the net worth we are having, but then to alag like differently we require CA.
Yes, yes, CA report is mandatory in that case.
Okay.
वैल्यूएशन कैसे किया गया है, ये जस्टिफाइड कौन करेगा? तो एक सीए रिपोर्ट से जस्टिफाइड होगा कि वैल्यूएशन नेटवर्थ का एक्सेट्रा का ठीक से किया गया।
Okay, and sir, what will be included in the non-monetary consideration exactly in that slum sale?
Yes, a good question, because in that consideration it has been written correctly, monetary and non-monetary.
Non-monetary.
करेक्ट। अब लुक, मेरी एक फैक्ट्री है और मैंने कहा मैं इस फैक्ट्री को सेल करूंगा 1 करोड़ रुपीज, आई विल टेक इन मॉनेटरी टर्म, और जो सेलर है मैंने कहा उसके बदले में आप मुझे अपनी लैंड भी दोगे। तो अब नाउ 1 करोड़ रुपीज इज कंसिडरेशन, एंड मैं उस कंसिडरेशन में मॉनेटरी के साथ उस सामने वाले से उसकी क्या ले रहा हूं, लैंड। तो उसकी जो मार्केट वैल्यू है सपोज इट्स 40 लाख, तो मेरा कंसिडरेशन माना जाएगा 1 करोड़ एंड 40 लाख। तो अगर हम कंसिडरेशन में अपनी यूनिट को ट्रांसफर कर कर सामने वाले से मॉनेटरी वैल्यू लेते हैं, वो भी ऐड होगी। अगर उससे मान लीजिए कहते हैं कि आपको अपनी ज्वेलरी भी देनी पड़ेगी, या आप अपने कोई घर भी मुझे दीजिए साथ में, तो उनकी मार्केट वैल्यू भी कैलकुलेट कर कर दोनों का एग्रीगेट माना जाएगा सेल कंसिडरेशन।
Okay.
ओके, क्लियर?
Okay. Thank you, sir.
Welcome, well done. Okay, so before start the class, let's see the thought for the day. Before showing you the thought for the day, I have a simple question for all of you. What is the opposite of success? Can you tell me what is the opposite of success? What is the opposite term of success? Arshada is saying failure. Of course, Tanu is also saying failure, and Priya is also saying failure. So generally it happens that we think the opposite of success is failure. Let me show you today's thought for the day. And might be your thinking is going to be changed for entire your life. And now you can see this is the correct thing. Failure is not the opposite of success. It is part of your success. It's very, very deep thought. And you can see, yes, if somebody is successful, then there must be some failure. Whether it's Mr. Elon Musk, whether it's anyone in your life, you know. If somebody is successful, so the success cannot be achieved without failure. So failure is not technically the opposite of success, but technically it is a part of your success. And at times it happens. Failures encourage you. It encourages you to become successful, to prove others that yes, I can do this. So I believe when I have seen this thought, my entire life, this perception has been changed that success opposite is failure. No, failure is the part of your success. So if you are not going to clear your examination, if you fail, then please do not think that you are not cleared. It is the part of your success, what you will achieve later or sooner. So it's a very beautiful thought for all of you. Astha is asking, sir, non-monetary asset consideration includes only capital asset in slum SIP? Any kind of consideration, like we are considering anything, whatever we will receive against the asset we are transferring, whether it's slum sale or any other case. Like you must have gone through with the section 247, in which we have gone through with the definition of transfer. And the first point of transfer was sale, exchange. An exchange means any non-monetary item. If you are receiving any non-monetary item against transferring your asset, then the market value of that non-monetary item also will be considered as consideration. Okay. There are Mr. Chauhan is asking, sir, provision related residential house, REC bonds, agricultural land will be discussed in today's class. Today we will be discussing exemption of section 54, in which there is residential house, of course, agricultural land, section 54B. So yes, we are going to take those sections. Okay. Means that should be a capital asset, not necessary. If I am going to transfer my capital asset and against that I am receiving services of someone else, so that services I am receiving, even that the market value of that service could be counted as a sale consideration. Okay. Astha is asking, sir, if unlisted bonds or debenture transferred before 23rd July, then also no indexation? Yes, there is no indexation on debenture and bonds until otherwise those are capital index bond, etc. As short term or long term, but on or after 23rd July, always short term. Yes, clear, correct, Astha. So if during an interim order we received compensation or enhanced compensation, then when case is finalized or when final order is received, capital gain taxable in year of final order. Generally, practically it happens when there is an interim order. So there is a time duration against which you can appeal in the other court. So if after that appeal time period has been elapsed, only after generally compensation received in practical life. So it would not be happen normally that after interim order you will get the compensation and then there is someone is going to appeal against it. But even if it happens, you have to recalculate your capital gain as we calculate in original compensation cases. Okay. Sir, self-generated goodwill or profession transfer, why not capital asset? Why you are asking these questions? We have discussed these topic in our first class. Because self-generated goodwill, that is on personal nature, cannot be transferred. You cannot transfer your degree. You are a chartered accountant. So are you able to transfer this degree to someone else? You have cleared your 12th, okay? And you suppose scored 93% of marks, okay? Your friend scored 39% and she is very sad. So you asked her, okay, fine, my mark sheet is now yours. From today, I am surrendering my mark sheet to yours and your mark sheet is now mine. So from tomorrow, you will be considered as having 93% marks and my marks would be 39%. Is it possible? No. We cannot transfer our personal goodwill. If Mr. A is doctor, he cannot transfer his degree to anyone else. So that's why there cannot be a transfer. That's why it cannot be fall under capital gain topic. So if capital asset used for both, that is for personal and official, then transfer will be considered as capital asset or not. Like if you are using a car and you might be using that car for official purpose and personal purpose both in practical life. But we have to find out when you purchase that car. So bill is in the name of your office or bill was in the name of your personal name. So if the invoice has been in the office name, we will consider it as an commercial asset. Even if you are using it for personal purpose, also because in practical life, this is impossible to find out whether you have used it for personal or professional purpose. So on the basis of document, we will find out. You bought an air condition in the name of your business, but you installed it at your house or residential. Then how income tax officer will come to know whether you have installed it at your office or at your house? They will not come to physically check this. This is practically impossible. So we will see the invoice. The invoice is in the name of your business. That would be considered as commercial. Otherwise, it would be considered as your personal asset. Sir, if society charges more than house value as its membership fee, then whole value. I believe you revised all capital gain yesterday. So that's why you are having those questions, what we have already discussed earlier. If society charges more than house value, then the membership fees would be considered as sale consideration, even if it is more than that. Okay. Sir, it is written property includes and shall be deemed to have always includes any right in or in relation to an Indian company, including rights of management or control or any rights whatsoever. Sir, if we transfer this, then also capital gain. So does this fall in the definition of capital asset or not? We have to see this. So in context, you are asking this question. You have to tell me that from where you are getting this concept, then I can see that from the study material, etc., and I can explain in detail. So the context is very important. Whatever question you are asking, the context is very important. But in part performance of contract with the help of power of attorney, if he sells, the capital gain will be chargeable to him only and not on the legal main owner of the asset. Whether you use power of attorney or not, if the consideration and possession has been done, even if power of attorney is not there, or yes, in that situation, we can consider it as a transfer depending upon the special circumstances. Okay. Look, without power of attorney, who will do that? Suppose a situation, Mr. A is having 5 crore rupees, Mr. B is having a house. So suppose if Mr. A gave 5 crore rupees to Mr. B, and in response, Mr. B gave the possession of that property to Mr. A. And if that is not with power of attorney, that means you are trying to say there is no written agreement that I have transferred money and I have received the house. So suppose how dangerous this is from the point of view of Mr. A, if there is no written document. So government will not come to know how it happened. So if it is no written legal document which is registered as power of attorney, need to be registered. So suppose in a simple stamp paper, Mr. A gave 5 crore rupees to Mr. B, and in response, Mr. B gave the possession of the house to Mr. A. So will Mr. A will do that? Why? Because next day Mr. B can come and say he has forcefully get the possession and he is living my house. How Mr. B will prove that he received the payment? So practically it won't be possible. There would be generally power of attorney except the registry. So if there is power of attorney and possession and monetary transfer, we will consider it as a transfer. In the net worth calculation in slum sale, should we consider the net worth definition says we will consider only current liabilities. We do not consider long-term liabilities. You should go to the definition of net worth in your accounting definitions. You will find out the exact meaning also. Okay, so now moving on. Today we are going to discuss exemption provision. And as At the start of class, I have said that there are two kinds of exemption under capital gain exemption. First is income-based exemption. So we are having two main income-based exemption under capital gain. One is section 1037, in which if you are receiving compensation, whether original compensation or enhanced compensation, for compulsory acquisition of your agricultural land. So if you are receiving original compensation or enhanced compensation against compulsory acquisition of your agricultural land, then that compensation is going to be exempted. What are the other conditions? We will discuss it in detail. The second is section 112A exemption, in which you have seen that 1,25,000 rupees exemption would be there if there is a long-term capital gain which do fall under section 112A, then tax would be charged after exempting section 1,25,000 rupees. So these are two income-based exemption, and these are 5 exemption based on investment scheme. So these exemptions are not literally exemptions. So exemption generally means there must be some income and that needs to be exempted, whether it's agricultural income, etc. But these second kinds of investment-based exemption, these you can claim if you invest in a certain property or an asset. So if you are having some capital gain after reducing your index cost of acquisition, your cost of acquisition, if you are having certain capital gain, and if you are going to invest the amount in these specific and different scheme, then you can get the exemption under this section. And all these schemes having certain conditions. So if you are able to fulfill these conditions, you can get exemption under respective scheme. So today we will discuss both A, income-based exemption, and B cases, that is investment-based exemption. So let's start with the help of the notes. So capital gain and exemption in India. The first is section 1037, and you can see multiple important points in this paragraph. One by one you will see, and this is exemption on capital gain on compulsory acquisition under section 1037. The first important point is the gain, long term or short term, both exempted. So whether your asset is long term or short term, the gain would be exempted if following conditions are fulfilled. To an individual or HUF. The second important point is this exemption can be used or availed by only individual or HUF from transfer of agricultural land only. The third important point is exemption is only for agricultural land. So you might be thinking that we have gone through that agricultural land is not an capital asset. Yes, agricultural land, if it is in rural area, that is not a capital asset. So if there is an agricultural land and it is in rural area, then that is not a capital asset. We do not need this exemption. So that means we are talking about agricultural land in urban area. So this exemption only will be applicable if there is an agricultural land in urban area. If it is in rural area, we do not need this exemption. So first point was whether it's long term, short term, exemption would be there. Individual HUF only. And there should be agricultural land in urban area. The fourth important point is the transfer should be by compulsory acquisition. Suppose I am having an agricultural land in urban area. I am an individual. If I am transferring it, if I am selling it to someone else, I am selling it, or exchange or relinquishment, etc. In that situation, there would not be this exemption work. Exemption would be work only if there is compulsory acquisition. Of course, because exemption is for OC and EC, and OC-EC will be only in case of compulsory acquisition. Shall be exempt. So there are 4 important conditions till now, that there could be a long-term or short-term, individual HUF, agricultural land, urban area, compulsory acquisition shall be exempt. But there are more conditions. Provided OC or EC. OC we know, original compensation. EC is enhanced compensation. Received on or after 1st April 2004. So if OCEC received before this date, that is going to be taxable. If it is received on or after 1st April 2004, that is exempted. More conditions are there. If such land has been used for agricultural purpose. So the land which is a agricultural land should be using for agricultural purpose, and that is point number 6. And the 7 important point. At least 2 years immediately preceding the date of compulsory acquisition. At least 2 years. Suppose compulsory acquisition has been done today. And from last 1 year only, we are using that agricultural land for the purpose of agriculture. Before 1 year, we were using it for any other purpose, or it was not used for agricultural purpose. So at least it should be used for 2 preceding year for agricultural purpose. Clear? If it is not, exemption would not be there. And that for that purpose, it should be used by individual or his parents or by HUA. So that means if I let out my agricultural land to someone else, and that person is using it for agricultural purpose for 3-4 years, after 3 years, I have decided to transfer that agricultural land. Exemption would not be there because I have to use that agricultural land myself or my parents can use for agricultural purpose. Or if it is an HUF, then HUF should use it for agricultural purpose. So you can see in a simple 4-line paragraph, there are 8 important conditions to applicability of this exemption. So you have to see all of these conditions should be satisfied for claiming the exemption. Now, some clarification. The clarification says even compulsory acquisition, CA is compulsory acquisition, is before 1404. Provision says suppose compulsory acquired in 2002 and decided compensation 50 lakh and compensation received in 2005. So exemption would be available. So it does not matter when the property has been compulsory acquired. The important thing when amount has been received. So if it is received on or after 1st April 2004, exemption would be there. So the point is explaining you this. But compensation is received on or after 1st April 2004, it shall be exempt. Now a very interesting thing. Suppose compulsory acquisition took place in 2001 and compensation decided by government 50 lakh. Okay. Out of this 50 lakh, 20 lakh received. 20 lakh received in 2003 and 30 lakh received in 2006. So out of this 20 lakh or 30 lakh, which compensation will be exempt under section 1037? Whether 20 lakh would be exempted or 30 lakh is going to be exempted. Send me your answers. Anubhav is saying 30 lakh, Soumya is saying 30 lakh, Nidhi is saying 30 lakh, Almas is saying 30 lakh, Harshada is saying 30 lakh. Okay, when we solve section 45.5, Mohammad Farhan saying no exemption. Correct, Mohammad Farhan, you are correct. There would be no exemption, students. Why? Because when we have gone through with the provision of compulsory acquisition, we have seen then original compensation full or part received, we will taxable the full compensation. So when I say that 20 lakh is received in 2003 of original compensation, how much we must have taxed at 2003? We have to take the sale consideration full value 50 lakh for the purpose of taxability. We have seen that when the part of the compensation, original compensation part, when we receive in future, that does not have any treatment. So if original compensation part has been received before 1404, then full compensation going to be taxable, whether the other part is going to be received in after. Yes, if EC is received on or after 1404, in that case, that is going to be exempted, but OC cannot. The second line explaining this, but if part of OC is received before 1404 and remaining part is on or after 1404, then no exemption of such receipt even after 140. I hope it's clear. Section 112A exemption, that is 1,25,000, that we will see in rate of tax provision. That will be discussed after exemptions of category B. So now we are moving on to investment-based exemption. So these are investment-based exemption. 5 exemption we have to go through to understand these concepts. So till now we have seen that if there is capital gain, how do we calculate the capital gain generally? The basic structure, the basic format is like this. There would be sale consideration. Then there would be expenses on transfer. Then there would be net sale consideration. And after that, whether cost of acquisition or index cost of acquisition, whether cost of improvement or index cost of improvement. Clear? Then we will have our long-term capital gain or short-term capital gain. Clear? If there is long-term capital loss or short-term capital loss, then there would be exemption not applicable, because exemption would be applicable only when there is gain. Only in that case we are going to reduce something. Now. So if there is no gain, so there would not be any exemption advantage. Exemption advantage would be only if there is gain, whether long-term or short-term. So if there is long-term gain or short-term gain, then we can apply these exemption, investment-based exemption, whether in section 54, 54B, 54D, 54EC, and 54M. And to claim these exemption, there are certain conditions as well as certain restrictions also. It's not that if you fulfill the condition, you will get the exemption. Even after getting that exemption, even after claiming that exemption, even after taking the benefit of that exemption, the exemption can be revoked if in future you does not follow the restrictions. So there are some restrictions also even after claiming the exemption, and you have to follow those restrictions. If you violate those condition or restriction in future, so even what exemption you have claimed, government will take it back from you. How all of this thing is going to be done, we are going through with all sections one by one. Okay. So there are multiple condition and restriction. So first one, the most important thing to understand in these exemptions are, first of all, you have to understand which exemption will trigger on fulfilling the basic condition. So if there is a question, there is a capital gain, and after that capital gain, the question says that certain amount has been invested in this scheme. So first of all, you have to find it out which exemption scheme has been triggered, because these all 5 schemes are mutually exclusive. What does that mean? If first condition would be applicable, like section 54 exemption has been triggered, that means other cannot be triggered. So one by one, you have to go through with these exemption. So first is to understand when which exemption will trigger first. Section 54. So section 54 says RH. RH stands for residential house. So if you transfer, T for transfer, if the transferred asset is residential house. So if there is a capital gain on transferring of a residential house, fine, you transfer a residential house and there is some capital gain. And if you purchase or construct new residential house against that transfer of residential house, then section 54 exemption you can claim. So the basic condition for the applicability of section 54 is you have to transfer your residential house, and against which what you need to purchase another residential house, whether purchase or construction. So the transferring asset would be your old residential house, and now for claiming the exemption, if you purchase a new residential house, you can claim the benefit under section 54 if other conditions are satisfied. For example, if you have a sale consideration of your residential house, suppose 90 lakh, your cost of acquisition or index cost of acquisition, suppose 60 lakh. Now you have a long-term capital gain of 30 lakh. So either you can pay tax on this 30 lakh rupees. If you want to pay tax, you can pay tax on this 30 lakh rupees. But if you want that exemption that I don't want to pay tax on this 30 lakh rupees, then we have exemption number 54. The exemption says invest this 30 lakh or up to 30 lakh rupees for purchase of a new residential house. Suppose you purchase a new residential house of 40 lakh rupees. So up to 30 lakh, your gain would be 0. So if you invest more than that, the balance would be waste. If you purchase a new residential house of 25 lakh, then exemption would be 25, 5 lakh would be your capital gain taxable. But if you invest more than the capital gain, then the excess investment would be no value, that would be waste. So if I transfer a residential house and if I purchase a residential house or construct a new one, then I can claim the exemption under section 54. But this is not that simple. We have multiple condition and restriction under section 54. Let's read those one by one. Let's understand them. First one. This exemption is only for individual and HV. Let me tell you, whenever there are exemption scheme, and if there is residential house benefit is there, the assessee would be always only individual and HV. So a partnership firm, a company, etc., they cannot claim exemption under section 54. Only individual and HUF can claim this exemption. First condition. The second condition, the asset you transfer, what we are transferring, residential house, that should be a long-term capital asset. So if you transfer your residential house, and if it is not long-term, it is a short-term capital asset, forget about exemption under section 54. No exemption under section 54 is there. Clear? Two conditions are simple. Now the third condition is very interesting. Amount invested in one or two residential house. That means either whatever you have transferred, you transfer a residential house and you having some gain. For that purpose of gain, you want to invest. So now you can even invest in two houses. If you purchased one house, the amount of purchase would be reduced as an exemption. But if you purchase two houses, then yes, you can claim the exemption of two houses also. How? Let me tell you this. Suppose the long-term capital gain by transfer of two houses is, by transfer of one house is 140 lakh. Clear? Now suppose you purchased only one residential house worth rupees 110 lakh. Then exemption would be 110, 30 lakh would be your long-term capital gain. Take the second scenario. Suppose 140 lakh long-term capital gain. You purchased 3 houses. One is for 70 lakh, other is for 60 lakh, and third one is for 50 lakh. So now you can take any two of these houses for exemption. And which houses you will take? The higher value houses. So now the exemption would be 130 lakh. Remaining 10 lakh only would be your capital gain. So now the benefit is not only for one residential house, but you can purchase or construct two residential house, and any two residential house you can claim as an exemption. But there are some restrictions. This two house exemption, listen carefully. This two house exemption, you can claim only once in your lifetime. This is kind of lifetime achievement award. Only one time you can claim. If you claimed two house benefit in this year, and then again next year or after 3 or 4 years, you transfer your other residential house and again purchase two residential house, then you cannot claim this exemption. Then only you can claim any one house exemption. So this exemption is like lifetime achievement award. You can only claim two house exemption in a year, only once. And there is one more restriction. The gain should not exceed more than 2 crores. So if the gain exceed 2 crores, then only one exemption of house you can claim. Suppose there is gain of 240 lakh in this case. In the second case, suppose there is gain of 240 lakh. You did not claim two house exemption ever. Now you purchase three houses. So if gain is up to 2 crore rupees, you can claim two house exemption if you want. But if gain exceed 2 crore rupees, then you cannot use this exemption. Only one house exemption you can claim. So in this scenario, we can only claim 70 lakh. Suppose in the next year, if it is less than 2 crore, then again you can claim the two house exemption. But this 2 crore, this two house exemption is available only if your gain is up to 2 crore rupees. Now we can see this restriction. So first condition was individual HUF. Second condition, asset should be long term. You can purchase one house exemption, you can take two house exemption, but two house exemption is a lifetime exemption and it can be used only in that year in which gain does not exceed 2 crore. You can see this. Investment can now in two house in India. Yes, this is also important. The house you are purchasing should be in India. If it is outside India, you cannot claim the exemption. If capital gain does not exceed 2 crore and two house exemption only can claim once. So two house exemption is having two restrictions. First one, lifetime, only once can claim. Second, capital gain should not exceed 2 CR. If exemption claimed for two house property in assessment year 25-26, then cannot claim two house exemption again in future. Only one house in a year can be exempted, even gain less than 2 crore. So once you have take the benefit of these two houses exemption, you cannot claim again in the future. Restriction does not end here. Now, if capital gain increase 2 crore, then only one residential house exemption. We know that. But there is overall limit also. Maximum 10 crore exemption only you can claim under this section, even for one house. Suppose this 10 crore concept will not be applicable for two houses because if gain is exceeding 2 crore, you can only claim exemption of one house. Now, suppose it happens like this. We are having multiple example of this exemption. Do not worry, we will discuss all examples so that you will feel that is easy. Now, suppose capital gain is 9 crore. You have purchased two houses. One is for 7 crore, one is for 1 crore. So you can claim only one house exemption. And that would be this 7 crore one. Simple. Suppose your capital gain is 13 crore. You purchase only one house for 11 crore rupees. So the maximum exemption under section 54 you can claim is maximum it's 10 crore. The exemption cannot exceed 10 crore. So even you invest 11 crore, but you will get the exemption of 10 crore. So balance would be your taxable liability. Okay. Balance would be your taxable gain. We are having multiple questions regarding this. First of all, just try to understand the provision. And as I told you always, when you are going through with numerical topic, we always able to understand that numerical topic when we practice the numericals. So first of all, just try to understand the concept that what is happening, that you should transfer one residential house and you can purchase or construct another residential house to claim exemption. You should be an individual HUA. The transferred asset should be long term. The new residential house exemption can be for one house or two houses. Two house exemption can be claimed if gain does not exceed 2 CR. If it exceeds 2 CR, only one house exemption can be claimed. If two house exemption has been claimed, it cannot be claimed again in future. The maximum exemption under section 54 is 10 crore for a year. We cannot claim more than 10 crore. Clear? Priyanshi is saying, sir, construction of two houses given. You can do the construction of two houses, even you can purchase two houses. No issue. So what is that 140 minus 110? That was the example we were discussing. 140 we assume a long-term capital gain, Dhanush, and we suppose that we purchased the new residential house for 110 lakh. So that is the exemption. Balance 30 lakh be your capital gain taxability. Priyanshi is saying two house together in a year. Yes, two house together in a year if your capital gain does not exceed 2 CR. Let me complete this section 54 and then we will move on to the example of section 54. You will understand each and everything. Just trust me, relax. Now there's a condition. When we need to purchase, Ms. Tanu is saying, sir, एक हाउस के एग्जेम्पशन तो अवेल कर सकते हैं. बिल्कुल कर सकते हैं तनु. एक हाउस के एग्जेम्पशन तो आप पूरी लाइफ अवेल कर सकते हैं. जब भी आप कोई अपना रेजिडेंशियल हाउस बेचेंगे तो उसके अगेंस्ट में एक हाउस की एग्जेम्पशन तो हमेशा अलाउड है. बस वो 10 करोड़ से ज्यादा नहीं हो सकता. अगर एक हाउस भी हमारा मान लीजिए जो कैपिटल गेन है वो 12 करोड़ है और जो हमने एक हाउस लिया वो 11 करोड़ का है, तो एग्जेम्पशन सिर्फ 10 करोड़ की मिलेगी. और अगर हमारा गेन 2 करोड़ से ऊपर हो गया फिर तो एक ही हाउस की मिलेगी. दो हाउस की एग्जेम्पशन सिर्फ उस साल ले सकते हैं जिस साल आपका गेन 2 करोड़ तक होगा. Soumya is asking, so can we claim one house exemption 1 year and another house in another year? If the other conditions allow you, we did not complete this exemption. We are just in the way. So if as per the other condition it is possible, then you can claim. So just wait. Let me complete this section. After completing this section, then if the query will be in your, you think there's some query, then you will ask, because at that point you will be able to correlate your query. So abhi whatever Soumya you are asking, you will get your answer once our condition would be complete. So moving on, up condition number 4 is saying, we have seen there should be individual HUF, then we have seen asset should be long term, and we can claim the exemption of one house, two house accordingly. But now point number 4 says, when do we need to purchase that new house or when we need to complete the construction of that house for which we want to claim the exemption? So very interesting provision has been made by the department, and it says, suppose we transfer a residential house and the date is suppose 10th July 2020. Clear? The long-term capital gain arise on transfer of this house is suppose 160 lakh. So we can claim two house exemption if the assessee does not claim that exemption earlier. Clear? Now, which house exemption we can claim? So income tax had made 3 time limits. It says you can claim the exemption of a house which has been purchased. Listen carefully, which has been purchased within 1 year from the date of transfer. So we have transferred the house on 10th July 2024 and we are having a gain. Suppose we have purchased a house on 11th 2023. So that is between 1 year from the date of transfer. So the date would be this. So if we transfer on 10th July 2024, that means the 1 year date would be 11th July 2023. So if you purchased any new house during this duration, within 1 year from the date of transfer, within 1 year, then you can claim the exemption of this house. If suppose that is purchased on 11th November 2023, then you can claim the exemption of this house, that is allowed. Clear? Suppose the value of this house is what we have purchased within 1 year is suppose 40 lakh rupees. So this house is eligible for the purpose of exemption because department says whatever asset you have transferred, if within 1 year between the asset you have transferred, any new house has been purchased, you can claim the exemption of that house. So this is house 1 eligible for exemption. Suppose one more house has been purchased on 10th December 2022. Value 70 lakh. But because that has been purchased before 1 year, so that is not eligible for the purpose of exemption. So only those house exemption you can claim, those have been purchased within 1 year from the date of transfer before. Okay. Now, somebody says, no, I will purchase after I will transfer this property. Generally, it happens practically. First, we transfer our property, then we purchase a new house. But in the case of exemption, the benefit has been given for both ways. From the date of transfer, if you have purchased any property within 1 year, you can claim the exemption of that house. And if you want to purchase any property within 2 years from the date of transfer, so that property also eligible for the purpose of exemption. So from 10 July, the next 2 years, till 9 July 2026. So if during this time period, if you purchase any new house property, suppose you purchase a new house of 50 lakh rupees. So now this is also eligible for the purpose of exemption. So this is eligible. This is also eligible. This is not eligible because it has been purchased before 1 year. So we have option number 1, 40 lakh. We have option number 2, 50 lakh. So you can purchase within 1 year before the date of transfer. You can purchase within 2 years from the date of transfer. And now we have also option for construction. 3 years. You can construct, completion of construction should be done within 3 years from the date of transfer. So you decided you will not purchase a house, you will construct it. So from the date of transfer within 3 years, if you are able to construct a house, the construction should be completed within 3 years from the date of transfer. So that house exemption can also be claimed. And suppose the value of this house is 35 lakh. So now you have a gain of, you can see, 160 lakh. You are having 3 eligible houses to claim the exemption. One is 40 lakh, one is 50 lakh, one is 35 lakh. And you did not claim 2 houses exemption. So you can see now the gain is less than 2 crore. So we can claim the exemption under section 54 for any 2 houses. And of course, the higher value would be preferred. So these two houses should be claimed as exemption. So that will minimize your capital gain. So 90 lakh would be my exemption. 70 lakh would be my taxable long-term capital gain. So if in the question it has been given that new house has been purchased within 1 year, you can claim the exemption. Within 2 years, you can claim the exemption. Within 3 years, constructed, you can claim the exemption. If house has been purchased after 2 years, suppose one house also purchased after 2 years, on 10th October 2026, value is suppose 90 lakh. So after 2 year purchase, not eligible for the purpose of exemption. After 2 year only, construction benefit is there. Purchase benefit would not be there. Miss B saying, sir, it is 9/7/25, 9/7/26 for purchase. That's 2 years from 11/7/23 and so on. 11/7/23. Our transfer year, we are taking 2 year, 3 year, 1 year from the date of transfer, Miss Pooja. Not from the date of this house. Why you are taking from this house? The date would be considered from the date of transfer. The 1 year, the 2 year, the 3 year, all is connected from the date of transfer. Okay. In which year should we claim? We will claim in this assessment year 25-26. That is the problem. If somebody is thinking that the new house would be purchased in 9 July 2026, and we need to claim exemption in our previous year 24-25. So this is the future. How we will know that assessee will claim or purchase this house in this year? And if he is going to purchase in 9 July 2026 or before that, then how we will calculate this capital gain in assessment year 25-26? So practically you can think it that if the property or house is going to be purchased within 2 years, or construction is going to be done within 3 years, then we will come to know when the house is purchased or construct after 2 or 3 years. Then how we will able to calculate the capital gain in this year, current year? How I will come to know that somebody is going to buy a house within 2 years or not? So don't worry, if income tax has made some provision, there must be some solution for that also. So we are coming to that point also. That was a good observation. Okay. First of all, is it clear what we are discussing till now? That what we need to transfer, what we need to purchase. Clear? Assessee individual HUF, assessee asset long term. The maximum exemption, one house, two houses. When one house, when two house, this is clear. The time duration during which you purchased a house only would be eligible for the purpose of exemption. Till that point we have gone through with the provision. Point A says purchase, construct one or two near residential house in India. Purchase within 1 year before. Okay. Purchase within 2 years after. Construction in 3 years after. So time period is 1, 2, 3. Go. Okay. So 1 year before, 2 years after purchase, and within 3 years you have to construct. Now one more condition is there. Point number B. Newly acquired property. I told you there are some condition and now there are some restriction for future also. If you have claimed the exemption, for the property you have purchased or constructed, then that new property for which the exemption has been claimed, you cannot transfer within 3 years after its purchase or construction. What that does mean? It means, in this example, we have claimed the exemption for this property 50 lakh and this 40 lakh. Clear? For this property and for this property, we have claimed the exemption. Your gain is 70 lakh. Now the restriction on these property is this, that these property cannot be transferred from next 3 years from the date of purchase or constructed. So when this property has been purchased, you cannot transfer that property for next 3 years. You can sell it after 3 years. And if you have purchased this property, when we purchased it, we purchased this property on 11/11/23. So this property cannot be transferred again for next 3 years. So for any property, if you have claimed the exemption, then you cannot transfer those property for next 3 years from the date of purchase or construction of that specific property. Not from the date of transfer of this property, but when you have purchased that property or when you have constructed that property. From that date, you cannot transfer it for next 3 years. Now you must be thinking, what will happen if we transfer that? What will happen? So there are some penalties, there are some problem. If you transfer those property before 3 years, there would be some consequences. Dhanush is asking, in which year should we claim? Dhanush, I have just told you, just have patience, student. We have to claim that in our assessment year 25-26. How it will be done when I do not know that somebody is going to purchase a property next year or not, then how I will give exemption in this year? So we are having that kind of provision. After this point, what we are discussing, we are moving on to that point. Just relax. Priyanshi is asking why we do not reduce 35 lakh from long term. Priyanshi, because maximum 2 house exemption we can claim. So we have claimed 40 lakh and 50 lakh. So 35 lakh would be the third house. So we cannot claim more than 2 house exemption. Okay. Sure. So the next point was saying that you cannot transfer newly acquired house property should not be transferred within 3 years after its purchase or construction. If it happens, the consequence explained by point number C. If newly acquired house property transferred within 3 years, the cost of new asset on sale will be reduced by the amount of capital gain exempted earlier. Now what will happen? Now let me show you a separate example to make you understand all things. Suppose there is a residential house. Mr. A owned it. The sale consideration, suppose 190 lakh, less index cost of acquisition, suppose 80 lakh. So the long-term gain is 110 lakh. Mr. A purchased a new property within time and claimed exemption of section 54 for one residential house. The value is suppose 95 lakh. So the cost of acquisition of this property was suppose 95 lakh, and for that he claimed exemption. So the taxable capital gain is now 15 lakh rupees for this assessment year. Now the provision was saying that the new property you have purchased for which exemption has been claimed. You can see you have claimed the exemption. For which you have claimed the exemption, you cannot transfer this property for next 3 years. So this property should not be transferred for next 3 years. And suppose Mr. A transfer this property in next year. In next year, this property is transferred. So what will happen in next year now, assessment year 26-27? Suppose this property has been transferred and the sale consideration is suppose 130 lakh. Now because within 1 year it has been transferred, so that would be short-term capital. And now the cost of acquisition is 95 lakh. if I'm going to solve it normally, without any consequences, how I'm going to solve it? 30 lakh minus the cost of acquisition, and 35 lakh would be short-term capital gain. Clear? But because you violate the provision, because the provision was saying you should not transfer this property for next 3 years, but you transferred it. So department says no. Now we will take back the exemption you have claimed. So by purchasing of this property, you have technically reduced your capital gain by 95 lakh rupees. Because you reduced your capital gain, which was earlier 110 lakh, but you reduced it by 95 lakh due to the exemption. So our gain remaining only 15 lakh. So this 95 lakh benefit, what you have claimed with the help of exemption, we are going to take it back. And how we will take it back? The cost of acquisition, which was 95 lakh, which is going to be reduced. This cost of acquisition would be reduced by the exemption you claimed earlier. So the cost was 95 lakh. How much exemption you have claimed? Full 95 lakh. This is the exemption. So the exemption you have claimed earlier, we will reduce it from the cost of acquisition. So now what would be your cost of acquisition? 0. And your gain would be full 130 lakh. So you take the benefit and reduce the capital gain by 95 lakh. So we withdraw the benefit, and due to that, we increased your gain by 95 lakh rupees. So if you transfer that specific asset for which you have claimed the exemption, the cost of acquisition is going to be reduced by the exempted amount. Suppose case number 2, you might be thinking, according to this, the cost will always be 0. No, it's not like that. Suppose in the above example, long-term capital gain was 110 lakh, and the new asset you purchased for section 54 exemption, suppose the cost was 120 lakh. So in that case, you can only reduce your gain by 110, but cost is 120. You transfer this asset within 1 year. Sale consideration, suppose 140 lakh. Now the cost was 120. But how much we reduce for the purpose of exemption? The cost was 120, but you reduce your capital gain only by 110 lakh. So the exemption you claim need to be reduced from your cost. So in that case, the cost would be remaining 10. And the resulting gain would be 130 lakh. So it does not mean that always cost would be 0. Cost would be 0 only when full cost claim as exemption. But if cost is more and exemption is less than that, then there would be some cost of acquisition. So that is the consequence, that if you transfer that property within 3 years, then the capital gain exempted earlier is going to be reduced from the cost of acquisition. I hope it's clear. I know there are some complexities in provision because these are new kind of exemption, investment based exemption. These are new. And because they are having multiple conditions, so you might be thinking it quite complex. But let me say this thing to you. When after we will complete point number 5 and 6, and then we will solve some example, you will feel these are just condition and it's really easy to solve those questions in practical. Now the problem, what student might be asking also or thinking also, that if I'm going to buy a house after or within 2 years, and if I'm going to construct a building within 3 years, how I will come to know this thing in my assessment year 25-26? In the year transfer took place, we have to calculate the capital gain in the year transfer took place. So how I will find it out that assessee is going to invest or even I am going to invest or not? Suppose I transfer a property on 10th June 2024. There is long-term capital gain of suppose 90 lakh. Now for the purpose of claiming exemption, now I need exemptions clarification. Whether I am going to claim exemption under section 54 or not. So exemption will depend that I am going to buy a house before 1 year from the date of transfer, or I am going to buy a house within 2 years. So suppose I have a plan to purchase a house within 2 years. That is after the end of my previous year, after 31st March 25. Then how I will decide whether I would be able to claim my exemption or not? Suppose assessee is thinking to construct a property after 2 years in 2026. He thinks I will construct a property in 2026. And I have to calculate the gain and exemption in my assessment year, that is 25, 26. So how this exemption is going to be given, which is based upon our future investment. So that is going to be explained in point number 5 and 6. And it's very logically, department has made the provision that you will be able to claim the exemption or not. That is going to be decided in this year. How it is going to be happen? So to claim exemption under section 54, to claim exemption under section 54, you have to fulfill to claim exemption, you have to fulfill any one condition. Is this, you are having two options for claiming exemption in this previous year, in this assessment year, you will be allowed exemption. So you are having two options, option 1 and option 2. So either you fulfill option 1, then you can claim exemption in this assessment year, or you have to fulfill option number 2. Then you can claim the exemption in current previous year or assessment year. And for to claim this exemption, the date of ROI is very important. You have to either fulfill option 1 condition or you have to fulfill option number 2 condition. So what we need to do, up to due date of ROI. ROI is return of income tax return filing due date. So we are having a chapter also, return filing concept, in which you will read in detail the due date of returns. So that would be either 31st July 2025 in some circumstances, or it would be 31st October 2025 in some circumstances. When it would be 31st July, when it would be 31st October, etc., that we are going to discuss in detail in return filing chapter. So department says you have to fulfill one option up to these date as applicable upon. Suppose we do fall in first condition, 31st July 2025, or if you fall in 31st October condition, then according to this date, you have to fulfill either option 1 or either option 2. So what is option number 1? Now you will feel very silly this thing, what the provision is going to say. Option 1 say that you have to actually purchased or construction complete of new residential house to claim exemption. Up to which date? Up to 31st July or up to 31st October. So if you want to claim exemption under section 54, you have to actually purchase the property or construction should be completed for that property up to 31st July 2025 or 31st October 2025. If you done this, you can claim the exemption under section 54. So now you might be thinking, this is very wrong. If I have to invest, if I have to actually purchase the property, or if I need to complete the construction up to 31st of July, which is my return filing date, due date, or up to 31st of October, if I need to do this thing up to 31st July 2025 or 31st October 25, then what is the fun of those 2-year time limit or 3-year time limit after the date of transfer? Chalo, before date of transfer, we would be already come to know that whether we have invested or not before this date. If that case is applicable, in which we have to invest within 1 year from the date of transfer. So we would be able to find out whether we have invested or not. But if we need to actually invest or purchased or constructed up to due date of ROI, that means that 2-year or 3-year time limit is just a joke. So how that time limit would be applicable for me? So department say just relax. You are having two options. First option, either you can actually purchase or construction completed if possible. If you can do that, you will get the exemption in the same previous year. And if not, then we are having second option. Now this is very, very simple. You can deposit, like you have estimated that you are going to purchase a property for 60 lakh, 70 lakh, 80 lakh, or you are going to invest for construction purpose 90 lakh, 100 lakh, whatever. So that amount you can deposit in capital gain account scheme, CGAS, in a bank. In a bank, as you open an FDR, a deposit account, you can go and open a deposit account, a specific name with CGAS deposit account. You can deposit the amount what you want to use for the purpose of purchase of a new house or construction of a new house up to due date of ROI. So up to due date of ROI, either you have to actually purchase the property or construction need to be done, or practically, of course, you will not be able to do this first option. If I have transferred my property, I will take time to search the property. It will take time to construction. But department says at least tell us how much you are going to invest for the purpose of purchase or construction. Suppose I have deposit 80 lakh rupees up to due date of ROI in this scheme. So department will give you exemption in assessment year 25-26, assuming, trusting upon you that you will invest 80 lakh rupees for the exemption under section 54. So you will get the exemption of 80 lakh. That means you are having the 90 lakh capital gain, 80 lakh is going to be reduced out of it, 10 lakh would be your capital gain in this assessment year. So what will happen? 90 minus 80, 10 lakh would be your long-term capital gain. If you deposit, suppose 100 lakh, then full 90 lakh is going to be exempted under section 54. But we are assuming that you have deposited only 80 lakh rupees. So exemption would be in same assessment year. If you suppose actually invested, suppose yes, you have actually invested in, then there is no issue. फिर तो कोई problem ही नहीं है. The gain would be 90. Suppose you actually utilized 80 lakh rupees, actually purchased or constructed. Then there would be, of course, long-term capital gain. So you can have two options. Either you can actually purchase or you can deposit in CGAS scheme. The amount you will deposit, that would be considered as your investment. And you can claim the exemption in the same assessment year on the basis of this proof that I have deposited that much amount in my scheme. If you deposit 80 lakh up to due date of ROI, and after due date of ROI, you deposit 20 lakh again, that is waste. You cannot claim the exemption. Only up to due date of ROI, whatever you will deposit, that could be claimed as exemption. Now, whatever you have deposited, you have claimed the exemption. Now, there would be three outcomes in the future for that deposit amount. Whether you will utilize it actually, or you might not going to utilize it, or you are going to misutilize it. So what would be the outcome? What would be the consequences? That would be after a short break. So let me see if there's any query. With this provision, assessee can take benefit of assuming whole amount and take exemption. Yes, you have to deposit in the bank. You have to give the proof to the department, and you have to use in future also. So we were saying that if you do not use that, if you misutilize that, then in the future you have to bear the consequences, the taxability, etc. How it would be there, that we will see after the break. Nidhi is asking CGAS ka full form, capital gain account scheme. Okay. Okay, so we will discuss the three situations after the break. A good news for you is this. If you will understand section 54, then those four other exemptions, the 75 to 80% provisions are just copy paste. Whatever we are discussing in section 54, the same condition like capital gain scheme, ROI date, they are just copy pasted. Basic 2-3 conditions are different. Everything is going to be copy paste. So that's why we are discussing section 54 in detail. So after that, when we will go for section 54, B and D, that you will feel very easy. Harshada is saying, in case property transferred an exemption appeared in section 54 by previous owner and sold by assessee later, like Manjula Jesha, is this possible? What is the treatment? So the person who take the exemption, he needs to bear the consequences. The person who is accepting or transferring the property, that is not the case. So if I transfer the property, I took the exemption, and if I gift it to someone else and I violate the provisions for not transferring, etc., I have to bear the consequences. And if this, suppose there is no person in case of death, etc., then legal aid needs to bear that. Okay. So, Mr. Manish, can we go for a small break? Welcome back, everyone. So I believe you must have your coffee, tea, etc. So we were discussing the provision of section 54, and we were on the last point number 5 and 6. And we have seen that if you want to claim exemption, you have two options: whether to actually purchase or construct the property, or if not, then you have to deposit the amount you assume to invest for the purpose of purchase of property or construction in a specific account, that is capital gain account scheme. So whatever you will deposit in that scheme, income tax will give you the exemption, assuming that that is section 54 exemption. So in this example, assessee deposit, and this option you have to follow up to due date of ROI. Suppose we have invested 80 lakh rupees. We have deposited 80 lakh rupees. Then exemption would be 80 lakh rupees under section 54. But there could be three outcomes in the future. Suppose out of this 80 lakh, assessee utilized 70 lakh rupees for purchase or construction of residential house. Whatever as the case may be. Within time, within 2 years or 3 years, he utilized 80 lakh, 70 lakh out of this 80 lakh rupees for purchase or construction of residential house. So will there be any other treatment for this? No, because already we have given the exemption, assuming that he will utilize 80 lakh for the purpose of residential house purchase or construction. So on the basis of this, we have already given him the benefit of 80 lakh. And out of this 80 lakh, he utilized 70 lakh for purchase and construction of residential house. So we are not going to do any treatment of this value. The balance 10 lakh rupees, suppose out of that 10 lakh, he utilized 6 lakh rupees for purchase of car. So that's called misutilization. So suppose if out of balance 10 lakh, he utilized 6 lakh rupees for purchase of car. So that is going to be taxable as long-term capital gain in the year of misutilization. So if you will misutilize any amount, that is going to be your taxable capital gain in the year of misutilization. Clear? Fair enough. The balance 4 lakh remains unutilized. So it remained in the account. So the amount which would be remain unutilized is again going to be taxable as long-term capital gain in the year 3 years expired. Because the maximum time of investment was 3 years. So in the year 3 years expired, in that year, that remaining amount is also going to be taxable as long-term capital gain. Suppose he utilized full 80 lakh rupees for the purpose of house, then there would not be any misutilization taxability or unutilization taxability. So this is the provision to utilize the amount which has been claimed as exemption on deposit into capital gain account scheme. So these are the provision of point number 5 and 6. And it says, if amount not utilized before the due date of ROI for acquisition or construction of house property. So first option was that you can acquire or construct a property before or up to due date of ROI. It is not before, it is up to. Fine. It can be deposited with the Nationalized Bank in Capital Gain Account Scheme, CGAS, and maximum you can claim the benefit of course 10 crore rupees. If deposited amount not utilized within the time limit, unutilized or misutilized amount should be taxable as original gain in the year in which 3 years expire or in the year of misutilization. So students, there was some internet issue due to last night storm. You must have known about that. So we were discussing the provision, and point number 5, 6 we have discussed. Point number 5 and 6 we have gone through with this. Fine. So deposit section 54 we have gone through to understand the concept, how we need to calculate the capital gain, etc. Now the next exemption is section 54B. And if we have gone through properly, section 54 provision we have understood properly, then 54B is, you can see now it's going to be very easy. How? Because in section 54B, now the transfer asset need to be agricultural land. So agricultural land should transfer. In section 54, we have to transfer residential house. And section 54B, we have to transfer agricultural land. And we have to purchase agricultural land. For claiming the benefit of section 54B, we have to transfer agricultural land and we have to purchase agricultural land to take the benefit of section 54B. Again, the assessee should be individual HUF and the asset nature could be now long-term or short-term, any of it. So we can claim the benefit of section 54B whether my asset is long-term, short-term. Amount of exemption, there is no restriction of like 2 crore, 3 crore, 10 crore. The amount you will invest in agricultural land, you will get the exemption. So it's more relaxing provision. There are one condition. It says agricultural land situated in urban area was used by assessor or his parents or HUF for a period of 2 years prior to the date of transfer for agricultural purpose. So the agricultural land you are transferring can get the exemption if this condition also fulfilled. You can see this condition is just like section 1037 exemption condition. But section 37 and 54B is different. What's the difference? Do not think that we have seen that this agricultural land transfer is exempted. No. Section 1037 says if the agricultural land has been compulsory acquired, then this exemption will work. But section 54B does not consider the compulsory acquisition. It says if there is an agricultural land and it transfer, whether via sale or exchange, etc. Not compulsory acquisition. If agricultural land compulsory acquired, then there is no need of section 54B because full OCEC exempted. But if agricultural land transfer as a sale, exchange, etc., then 54B will come into force. And it says if that agricultural has been used by 2 years, used at least 2 years from the date of transfer, preceding the date of transfer via individual or parents or HUF, same condition as section 1037. But there was compulsory acquisition, that's why full exemption. But you can claim exemption under section 54B if that agricultural land has been used for agricultural purpose for last 2 years. Correct? Now purchase new agricultural land in urban or rural area. So you will get the exemption if you purchase any new agricultural land, whether in urban area or rural area, you can get the exemption. The time period for the exemption is 2 years after the date of transfer. No time period like 1, 2, 3 complicated, it's simple. From the date of transfer, if within 2 years you purchased a new agricultural land, you will get the exemption. B point is exactly same as per section 54B. That newly acquired agricultural land should not be transferred within 3 years. C point again copy paste as per section 54. If newly acquired agricultural land transferred within 3 years, the cost of acquisition would be reduced by the amount of exemption. No new concept. Point number 5 and 6 exactly copy paste. That if you want to claim section 54B exemption, either you have to purchase new agricultural land up to due date of ROI, actual investment, or you are going to deposit in the capital gain account scheme up to due date of ROI. Whatever you will deposit, we will give you an exemption. And if the misutilized amount, then taxable in misutilized year. If that is not utilized, then that difference is only one. Because in section 54, the maximum time for investment was 3 years. So unutilized amount is taxed after expiry of 3 years. In section 54B, you have to purchase new agricultural land within 2 years. So the unutilized amount is going to be taxable after expiry of 2 years, not 3 years. Okay, so this is the difference. Everything else from point number B, C, 5 and 6 is exactly same. Now 54D. Again, it says compulsory acquisition. Now this talks about compulsory acquisition. Again, do not confuse it with section 1037. Because 1037 exemption is for compulsory acquisition of agricultural land. And this is a compulsory acquisition of land and building forming part of a industrial undertaking. That means factory we are talking about. Industrial undertaking means factory, manufacturing unit. So suppose there is a manufacturing unit and government decided it to compulsory acquire. So government technically acquired your business. So there would be OC and EC, and that is going to be taxed as per the provision. But because government has acquired your business, so government is giving you an exemption because we have acquired your factory. So now from the OCEC, you may be going to start a new factory again. So if you purchase land and building or construct your factory, then the amount you invest on purchase of a new factory or construct, we will give you the exemption under section 54D. So 54D is very specific that it would applicable only in case of a factory is going to be compulsory acquired. And from the amount you have received as a compensation, if you invest that for purchase of a new factory, land and building, only in that situation you can get the benefit of section 54D. Suppose I am having a factory, I sell it to someone. I sell it to someone and get the money. And now from that money, I am going to purchase a new factory. So will this exemption will apply? No, because it should be a compulsory acquisition by government of your factory. Only in that case, if you purchase new land and building for your industrial undertaking, you can have the benefit. Okay. Because it is a relaxation provision, so assessee would be all person because government acquired your business. So relaxation provisions are there. Assessee all, time period all, whether it's long term, short term, does not matter, you will get the benefit. The amount invested in industrial land and building, you can get the exemption for the amount you utilize for the purchase of new land and building for factory purpose. Condition exactly same like agricultural land, that your factory should be running at least for 2 years from the date of compulsory acquisition. Industrial land and building was used by assessee for a period of 2 years prior to the transfer of business purpose. Purchase new land and building for industrial purpose, and the time period is for purchase and construct is same. Now that is 3 years. In first exemption, it was 1 year purchase, 2 year purchase, 3 year construction. In second year, it is only 2 year purchase. In third exemption, it's 3 year, whether you purchase, whether you construct. So it is relaxed provision because government has finished or confiscate your business. So provisions are more relaxed. All assessee include, all kind of asset include, you invest in new land and building, time period is 3 year, maximum time period is 3 year for both purchase or construction. B point exactly same, newly acquired property you cannot transfer within 3 years. If transfer, exactly same provision, your cost is going to be reduced with the amount of exemption claimed. Fifth and sixth, exactly copy paste provision, no difference. You have to either actual invest or up to period of ROI deposit in capital gain account scheme. If utilized, unutilized, misutilized or unutilized, misutilized would be taxable in the year of misutilization and unutilized would be taxable after 3 years, because in this exemption, investment time is 3 years. So you can see, if you understand the concept of section 54, then other exemption would be really easy to understand, because almost same provisions are copy pasted. Let me see if there's any query. Priyanshi was asking, sir, what if more than 80 lakh utilized? So in that example, if you utilize more than 80 lakh, you cannot gain any extra benefit. Whatever you have deposit in the scheme, 80 lakh, even if you utilize more than that, it would be a waste. No exemption for that. Last two exemption we have, section 54 EC and 54F. Now 54 EC. Okay, the three exemption we have gone through. In the starting point, if you'll see the heading of this section 54B and 54D. So there is a common thing between these three exemptions. What is the common thing you find out in the nature of these exemptions? In the starting section 54, 54B, I am not talking about the condition like assessee, period of holding, no. But what are the similarity between these three section chargeability? Can you find some similarity between these three exemption chargeability? 54 is for residential house transfer, residential house purchase, agricultural land transfer, agricultural land purchased, compulsory acquisition of land and building, forming part of industrial taking, new land and building, purchase or construct. So what is the similarity between these three things? Mohammad Farhan is saying immovable property. That is again nature of asset. I am asking about the nature of exemption. What is the similarity between nature of exemption? The nature of exemption, not about the nature of asset, etc. Anyone else? 2 crore is maximum? No, 2 crore maximum is under section 54 only. 54B, 54D has no monetary limit. It could be more than 10 crore also. Only section 54 is having that 2 crore and 10 crore limit. 54B, 54D does not have that kind of restriction. Yes, Jayendra is correct. Well done, Jayendra. Jayendra saying same asset acquired. Mohammad Farhan also decoded it. Correct. You can see whatever we are transferring. Almas is also saying correct. Well done, Miss Almas. Whatever we are transferring, we have to acquire that thing only. In the first case, we are transferring the residential house. And what we need to acquire? New residential house, whether purchase or construct. In section 54B, we are transferring agricultural land, and that is again urban area, not rural area, because if it is an agricultural land in rural area, that does not require the exemption. And we need to purchase another agricultural land, and that could be in urban or rural anywhere. 54D saying you have transferred, compulsory acquired your factory, and now you are purchasing land and building also for factory. So whatever we are transferring or whatever is going, we have to reacquire the same nature of asset to claim the exemption. But from point number 4, 54 EC, this thing is going to change. 54 EC and 54 F, these are different from earlier three exemptions. There are some difference in the nature of these exemptions. Now we will transfer something else and we have to purchase something else. Okay. Let's see what. Now 54 EC says any land and building or both. That means immovable property, but that should be long term. So any land and building or both, long term we have to transfer. And we have to purchase a specified long term capital asset. There are some bonds and security, etc. we are talking about. So there are some specific bonds and debenture we have to purchase, but we have to transfer land and building, immovable property, long-term capital asset. And the exemption limit is maximum 50 lakhs. So there is only three cases in which exemption restriction is there. 54, 54 EC and 54 F. Assessee, all assessee. Period head, long-term, land building both. Amount of exemption, amount invested in a specified asset. The specified assets are NHAI bond, RECL bond, PFC, IRFC, or any other notified bonds. The redeemable time period should be after 5 years. The redemption time should be after 5 years. What are the full form of these bonds? We are having the full form of these bonds. Ms. Shagufta Parveen wants to ask something. Let me see. Yes, Ms. Shagufta, what you want to ask? Can we unmute Shagufta?
गुड इवनिंग सर, आपकी ना आवाज नहीं आ रही है।
आवाज नहीं आ रही, बाकी सबको तो आ रही है। Am I audible, students?
वीडियो क्लियर नहीं हो पा रहा है।
आपके पार्ट पे में भी इंटरनेट का कोई इशू होगा। Students, am I audible? Yes, students are saying I am audible. Maybe at your part there is some internet issue, Shagufta. Okay, everybody is saying it's clear. Okay. Okay, moving on further. Okay. So section 54 EC is saying you have to transfer any long-term capital asset which should be an immovable property, and you have to invest in long-term capital asset, maximum up to 50 lakh, available to all assessee. Period head should be long-term. Special bonds are there. They should be redeemable after 5 years. Shubhanshi Grover, what do you want to say? You can send that in chat box. Okay. Now the condition, you have seen that in earlier exemption, section 54, 54B and 54D, there are time limit for investment was in year. Section 54 was having 1, 2, 3 year investment limit. 54B having 2 year, and 54D was having 3 year time limit for construction and purchase. But section 54 EC is only having 6 months time limit. Assessee has within a period of 6 months from the date of transfer have to invest in long-term specified asset. Long-term specified asset means any bond redeemable after 5 years of issued of NHAI, RECL, etc. They are the full form National Highway Authority of India, Rural Electrification Corporation, etc. You can go through it. So the time period is only 6 months. Newly acquired asset should not be transferred or converted into money within 5 years. This is the new thing. You have to remember it very carefully. In earlier 3 exemption, the time limit for 3 years. But for section 54 EC, the time limit for not transfer the asset or converted into money is 5 years. So what is the meaning of converted into money? That even you cannot take loan on these assets. So if you are having bonds and if you pledge those bonds as a collateral, and if you think against that bond, I would like to take a loan. So that would also considered as transfer, and this condition would be violated. So you cannot take even loan. So the new word is converted into money. You cannot transfer these assets. You even cannot take loan against these assets. If you take that within 5 years, the exemption consequences you have to fulfill. Now in the last 3 exemption, if you transfer property within 3 years, then what happened? Your cost of acquisition is going to be reduced. But from point number section 54 EC, the concept is going to be changed like this. Let me show you the difference between two. So section 54, section 54B, and section 54D. If the question relates to these 3 exemptions, suppose the sale consideration is 170 lakh less your index cost of acquisition or cost of acquisition, suppose 110 lakh. You have a capital gain 60 lakh. Now you purchased a new asset to claim exemption, and suppose the new asset cost is 50 lakh. So you get the exemption of 50 lakh. The remaining 10 lakh is going to be taxed. Now the provision says you should not transfer these assets within 3 years. And suppose you transfer that asset in next year. And next year, the sale price, suppose 85 lakh. So in these three exemptions, what we have gone through, we have seen what we will do, the cost of acquisition, which was 50 lakh, is going to be reduced by the exemption claimed earlier. So the cost would be 0 and remaining 85 lakh would be your short-term capital gain. We have seen this example. So what was happening actually, you reduce your capital gain by claiming exemption, and because you violate the provision, so what we are doing, we are reducing your cost. So in the result, the capital gain would be increased by 50 lakh. So there would be equal effect. Now from section 54 EC and 54F, the provision has been changed. Suppose taking the same example, 170 lakh less index cost of acquisition. I'm taking the same figures. 110, 60 lakh long-term capital gain. Suppose you have fulfilled the condition. New asset cost of acquisition is suppose 50 lakh. So you have reduced it 50 lakh. Your 10 lakh is your taxable gain. Now the provision says you cannot transfer it within 5 years in case of section 54 EC and 3 years in case of section 54F. But the consequences are same. Suppose in the next year you transfer this asset. So the next year, suppose the sale consideration 85 lakh. Now the new provision is here, or you can say the different provision is here. If the case for a section 54 EC or 54F exemption, then cost of acquisition will not affect it. It will remain 50 lakh. That is not going to reduce. So there would be now 35 lakh rupees short-term capital gain. So even you violate the concept, but due to that violation, the cost of acquisition would not be affected. So what will happen? The provision says if that is a case of section 54 EC exemption or 54F, then cost will remain same. No reduction in cost. We will reduce full cost over here, but the capital gain exempted earlier. Assessment year, next year, 26. The capital gain exempted earlier, that is going to be taxable again in this year. So 50 lakh capital gain was exempted earlier. This is going to be taxable again in the year in which asset is going to be transferred. So you can see the total taxability is again 85 lakh, which was in this case also. So over here also, if you apply condition 54, 54B, 54D, the gain would be same 85 lakh. And you can see if we follow 54 EC and 54F, again the total value of gain would be same, but there is one change. Something has been changed. Can you tell me what exactly has been changed due to this concept? The gain amount is same, but there is a change. Something has been changed, and the change is this would be full short-term capital gain. And now this case 35 would be the short-term capital gain, and earlier exempted gain is taxable. So earlier it was long-term nature gain. So now this 50 lakh would be your long-term nature gain. Total is 85, but nature of gain would be changed. Due to this, rate of tax would be changed because a different rate on long-term gain and different gain on a different rate on short-term gain. So you might be thinking that nothing has been changed. Then what is the impact of this provision? The impact of this provision is nature of change of gain. So the remaining, the old capital gain would be taxable again. So if that is long-term, it would be taxed as long-term. If it would have been short-term, it would be again short-term. But the current gain would be might be short-term. So the nature of gain could be changed. That is the difference between these two kinds of taxability. So you can see as the provision says, if newly acquired asset transferred within 5 years, capital gain exempted earlier will be chargeable to tax as long-term cap gain in the year of transfer. So this point does not say that we have to reduce the gain from the cost. It says do not impact the cost, just tax the capital gain which has been exempted earlier. And you can see there is no point number 6, no point number 7, because the investment time is only 6 months. So there is no ROI date provision has been made in this case. You have to invest within 6 months from the date of transfer. Now last section, section 54F. This is the last exemption section. And in my opinion, this is most important. This section has something different from all other sections we have discussed yet. Even there are some same provision also, but you will see there is some different concept is going to be applicable under section 54F. And it says the heading will tell you that there is something is going to be happened. You can see other headings were saying what we need to transfer and what we need to purchase. Now section 54F says any long-term capital gain other than residential house need to be transferred. So any long-term capital asset, but it should not be residential house. So this kind of language was not in any other case. Okay, you should go and read this section 54 EC note also yourself. But we are discussing on section 54F. It says there could be any kind of long-term capital gain other than residential house. And what we need to purchase or construct? Again, same thing, residential house. So you have to transfer any other thing except the residential house. You can transfer shares long-term. You can transfer jewelry, paintings, drawings, land, anything. Other than residential house, you have to transfer something and you have to purchase a new residential house or construct a new residential house. Why they are saying that you should not transfer residential house and purchase residential house? Because if you transfer residential house and purchase a new residential house, we are having section 54 for this. Why section 54F required? So I have told you these are mutually exclusive cases. So that's why they have removed residential house, because if this does not written over here, if the language is like this, any long-term capital gain and purchase residential house, then suppose if somebody is going to purchase, somebody going to transfer residential house, then two sections would be applicable, 54 and 54F. So to make these sections mutually exclusive, section 54F straightforward says that you can transfer any long-term capital asset other than residential house, and if you purchase residential house from that gain, I will give you exemption under section 54F. Why that is so? There's a logic behind it. If you think that that is why we do need this kind of thing, because we have section 54 for purchase of a new residential house. Why government make this new exemption also for the same asset? So section 54 and 54F, the basic difference. In our country, there are three basic needs: roti, kapda, and makan. Okay, that means food, clothes, basic necessity, fine, and shelter. So we are talking about this shelter, this residential house thing. Okay. So government wants to give exemption to those who are actually going to buy a residential house for them. So for those person who has already having a residential house, those having a residential house already, if they transfer their residential house and they wants to purchase a new residential house, so government makes section 54. But suppose there is an assessee, they do not have residential house ever. They were always a tenant. They do not having ever residential house in their name. So suppose if there is a person who always become a tenant and now he wants to purchase a residential house, he earns some money, he has having some other asset, he needs to buy a residential house. So there was no exemption for this basic necessity, because this exemption can be claimed by only those person, those already having a residential house. But for those persons, those are tenant, those do not have residential house in their name ever. Suppose they have collected some jewelry, some shares, they are having some land, etc. And now they have a dream to buy their home. So if section 54F is not there, they cannot take the benefit of section 54. So section 54F technically being drafted for those person, those willing to buy residential house, but they do not have residential house to transfer. But it does not mean that those person cannot claim this exemption, those are having residential house. Suppose I am having a residential house. I want to purchase a new residential house. So if I am transferring this residential house and then purchase section 54 applicable. But suppose I am also having some jewelry and I transfer my jewelry and purchase a residential house, then I will claim section 54F. So basic idea was for those person, those do not having a residential house and they wants to buy a residential house, section 54F has been drafted. But it does not mean that those person, those are already having a residential house, they cannot take the benefit. They can take the benefit, but of course they cannot transfer their residential house. They will transfer their jewelry, shares, etc. Any long-term gain asset. And if they will buy a new residential house, section 54F benefit would be there. But basically the drafting reason was for those do not having a residential house. Next is, let's discuss section 54F. So you have understood the basic behind this drafting of section 54F. Now the other conditions almost look alike or similar to section 54. Most of the condition. Only one in India. You can purchase one property in India. Individual and HUF. Two houses benefit is not here. Only one house benefit you can claim. The exemption can be claimed by individual HUF only. Time period, long term. The new thing is point number 3. In all previous sections, there are exemption limit, the amount you invest. Or there is a maximum limit in some case like 10 crore or 50 lakh. But there is no proportionate exemption concept was there. But the proportionate exemption concept in section 54M. How this proportionate exemption work, that we will discuss after discussing these following conditions. Again, the provision is same. You cannot take the benefit of more than 10 crore exemption. The maximum exemption in the section 54F is 10 crore. The condition, assessee should not own on the date of transfer of original asset more than one residential house. So this exemption can be claimed by those persons, those are not having any residential house. The basic idea was this, to draft this exemption. And even those persons, those are only having one residential house, can claim this exemption. If I am having two residential house already, and I am transferring jewelry and wants to buy a new residential house from that jewelry, I cannot claim this exemption. So this exemption is only for those assessee who does not, those are having residential house 0 at the time of transfer of the asset, or those are having one residential house already at the time of transfer. Suppose I am transferring jewelry to purchase a new residential house. So at the time of transfer, if I'm having 0 residential house, I can claim this exemption. I can purchase a new house for the purpose of exemption. If I'm having one residential house at the time of transfer of this asset, I can claim this exemption. But suppose if somebody is having 2 residential house already and he transfer jewelry and wants to buy a new residential house to claim exemption, he cannot claim exemption. Okay. Also see, the new condition also is here. assessee cannot purchase within 2 years or construct within 3 years from the date of transfer any other residential house. Once you claim exemption, once you purchase a new residential house or construct a new residential house, then you cannot purchase another residential house or cannot construct another building for next 2 years or next 3 years. That means once you have claimed this exemption under section 54, whether in this case you claim this exemption or in this case you have claimed this exemption, in this case not exempted. So if you claim the exemption for purchase or construct of a new house, then after claiming this exemption for next 2 years or next 3 years, you cannot purchase any new residential house and you cannot construct any residential house. Otherwise, what will happen? The same what happened in case of 54 EC. The capital gain exempted earlier is going to be taxable as long-term capital gain in the year in which new residential house occupied. So this is a new condition. The condition was earlier that you cannot transfer the new asset. That is also in this case. But now the special condition, if you claim the exemption under section 54F, even you cannot purchase any new residential house within 2 or 3 years. Otherwise, capital gain exempted earlier is going to be taxable. The time period for purchase new house is exactly same as per section 54. 1 year before, 2 years after purchase, or within 3 years you have to construct. B point is same, that you cannot transfer the property, but time period is only 3 years, not 5 years. C point is same. If you transfer within 3 years, then cost of acquisition would not be affected, but whatever capital gain amount exempted earlier, that is going to be taxed. Point number 5 is same. Either up to the due date of ROI, you have to actually purchase or construct new house, or you need to deposit the amount in capital gain account scheme. If the amount not utilized or misutilized, the amount is going to be taxable proportionate value. How this proportionate value will work, I am going to discuss it with you. So that was the last thing. Before discussion of that concept of proportionate, there are some clarification. This is just like your homework. You have to go through it. We also having homework of buyback of shares. We are going to discuss after 5 minutes. So this is regarding that 2 crore and 1 houses limit or 10 crore limit clarification with example. You should go through with all these clarification with examples. So the 2 crore concept, 10 crore concept, you will be able to understand clearly. All points are your homework. There are questions also, like the first case we were discussed. Suppose long-term gain is 7 crore. Cost of new house is 12 crore. So what maximum amount is 10 crore. So how much exemption we can claim? The provision says if capital gain is 7 crore, investment amount is 12 crore. So we cannot claim more than the capital gain amount. So the exemption would be 7 crore. So these are also your homework. You can go through with all these questions. These example also your homework part. Consequences. These illustration you can go through yourself, students. 54F, that we are going to discuss. Except the 54F concept, you have to go through with yourself. Now let me tell you what is that proportionate concept. After that proportionate concept, we will discuss the homework as we have, as I have given you in the last class. Now, in case of other exemption, whether it's section 54, 54B, 54D, and 54 EC, there is a common thing. If you want to know the exemption amount, how much exemption you would be able to claim. So the exemption would be equivalent to investment. But there is maximum limit in certain case. Like in some case, it's 10 crore. And in case of 54 EC, it's 50 lakh. But there is straightforward, whatever amount you invest, you can get the exemption. And if there is a point in which we have to decide how much misutilized amount is going to be taxable, misutilized amount, taxable value. So the amount you misutilize, that is going to be taxable. Simple. In the same way, if I'll ask you, how much unutilized amount is going to be taxable? So the answer is the amount unutilized is going to be taxable. There is very simplified provision in case of these 4 exemptions, that the amount of exemption equivalent to your investment, etc. But section 54 EC is having a specific proportionate formula to give you exemption or to tax your misutilized or unutilized amount. So in section 54 EC, if you want to find out the exemption, so the formula is original capital gain upon net, whether exemption amount, whether misutilized amount, whether unutilized amount, you have to use this formula and multiply that respective thing. So now, for the purpose of exemption, you have to multiply investment amount. Like you can see, this is similar, but to find out the exemption, you have to multiply the investment amount with original capital gain upon net sale consideration. And maximum gain, you know, that is 10 crore limit is there. The second thing, if you want to find out the misutilized taxable amount, then again we have to utilize this formula, original capital gain upon net sale consideration into amount misutilized. So you will find out misutilized taxable amount. If you want to find out the unutilized taxable amount, exactly use the same formula, original capital gain upon net sale consideration into unutilized amount. So you can see these are same. But the change thing is you have to apply this formula whenever you need to calculate exemption amount in section 54 EC, misutilized amount and unutilized amount. So you can see in the exemption part and taxability, this formula is here. When you need to calculate the amount, this formula is here. When you need to calculate the unutilized or misutilized amount, this formula is here. Okay. This is proportionate exemption only in case of section 54F. In all other case, there is absolute exemption if the conditions are satisfied. Let me see. (54F). Okay. We are discussing 54F. Just a second. Oh, sorry. Yes. Wrongly, I have written it 54 EC. This is, of course, 54F we are discussing. Correct. Fine. So you can see exemptions might be feeling like little complicated. But when we solve the question of these exemption practically, you will find out these are not that difficult. You have to focus and understand one exemption clearly, like section 54. If you go through with the provision of section 54 and you will learn it properly, then you will see the maximum things are repetitive, except in some exemption basic nature, other things are repetitive. And you have to see that section 54, 54B, 54D is almost similar, except those starting exemption criteria thing. And 54 EC and 54F having similar provision for the purpose of if we transfer the asset before a certain time. And in my opinion, this formula makes the 54F most important for the purpose of examination. I have already prepared a question of section 54F which is over here, example, solved example. So you will understand why it is that much important. Before that, I have given you the homework, last three buyback questions. So I believe that you must have tried those questions. And who will give me the answer? Let me show you those questions. Question number 11, 12, and 13. I have given you for the purpose of buyback question. You have to solve it. So can you tell me the answer regarding these questions, students, if you have tried? Mr. A bought 100 shares from a domestic company in 2020 for 40 rupees per share. In November 2024, company bought back 20 shares at the rate 60 rupees per share. Out of remaining share, Mr. A sold 50 shares at the rate of 70 each. So you have to tell what should be the treatment in the hands of Mr. A and what should be the treatment in the hands of a company. So who will answer those questions? I believe you must have tried those questions, students. So there would be income from other source, taxability in the hands of Mr. A, as well as capital gain taxability twice. One is in the case of buyback and one in the case of normal transfer of shares. So for buyback, in respect of 20 shares, you have to tell me the answer. In case of transfer, 50 shares taxability. So let's see.
Students, you can raise your hand also so that we can give the option to unmute yourself, and you can just give your answer and the reasoning as well as the computation.
Jayendra is saying no treatment in the hands of a company. Why no treatment in the hands of a company, Jayendra? Why no treatment in the hands of a company? Because it has been done on or after 1st October 24. Yes, exactly. Correct. Well done, Mr. Jain. Now, what should be the income from other source in the hands of Mr. A? There would be a deemed dividend concept. And we have discussed what would be the deemed dividend value in this case in the hands of Mr. A. Jayendra is saying 1200 rupees. Correct. Whatever you will receive, because the provision relates to after amendment. So whatever you will receive, the shareholder needs to pay tax on it. So 1200 rupees would be your income from other source. Now, what would be the treatment of these buyback shares in the hands of Mr. A? Except Jayendra, nobody is answering. Students, you did not try it. I have asked you in the last class that I have prepared some special buyback question for all of you. And I believe that you must have tried those things. Divya is saying 400 gain from buyback. No. Jayendra is saying 800 rupees loss. Yes, the correct answer is 800 rupees loss. Because the sale consideration would be nil in this case. And cost of acquisition of these 20 shares, which was at the rate 40 rupees per share. That means 800 would be your cost. So that would result in loss. What would be the treatment of these 50 shares, what he has transferred for 70 rupees each? Soumya is saying 4,000. No. Jayendra is saying, and Paran is saying correct, 1,500 rupees gain, because sale consideration would be 3,500. And the cost of these 50 share as per 40 rupees per share would be 2,000. So there would be 1,500 rupees long-term capital gain. And that was long-term capital loss. It can be set off. So my capital gain would be 700 rupees. I think you did not try it, other students. So I am giving you one more opportunity. Kindly try this question number 12 and 13. I will ask you these 12, question number 12 and 13 in the next session. So is there any query, students? Sahil is asking, can we avail section 54 and 54 EC exemption at the same time? Good question. Yes, we can avail the exemptions at the same time also, if we are fulfilling the respective conditions. As section 54 and 54 EC, that can be claimed simultaneously, it is possible. How? Suppose Mr. A transfer residential house for 140 lakh. The long-term capital gain, suppose, is 60 lakh rupees. He purchased a new residential house for 40 lakh rupees. And he also purchased NHAI bonds for, suppose, 15 lakh rupees. So first of all, we will give the specific exemption. So specific exemptions is section 54, because what we transfer residential house, what we purchase another residential house. So that would be the specific exemption. So first of all, we have to give the specific exemption if it is applicable in the case. And this is the second exemption, NHAI section 54 EC. So we can give this exemption also over here. So the gain would be 5 lakhs. So it is definitely possible that we can claim multiple exemption. Any other query, students? Question number 10, Soumya, we have already discussed this question in the section 112 cost of acquisition. There are 5 scenarios we have discussed. So the question number 10 is exactly the same scenario. So you can correlate that question number 10. It is same scenario, one of the scenario we have discussed in section 112A. Sir, but you said all these are mutually exclusive and can be triggered simultaneously. I have said these condition, whatever you have seen in the nature of applicability, those are mutually exclusive. That if section 54 is applicable, then first of all, section 54 need to be applicable. The other section would be the secondary exemption. It cannot be applicable. Firstly, initially section 54 need to be applicable. If you transfer residential house and if you are purchasing a residential house, that is the only condition which is applicable in section 54 exemption. Understand? So if you are not transferring residential house and if you purchase a residential house, then section 54 cannot be applicable. So for the chargeability, the cases are mutually exclusive. But for the purpose of exemption, if other conditions are fulfilled, you can claim the exemption. Tanu is asking how to remember all this provision. The only thing is you have to revise those. So you can do one thing, whatever we have discussed, I have told you multiple times, whenever you go through with the numerical topics, you maybe find it difficult because until we practice it, we would not be able to understand the concept clearly. So in the next session, when we will discuss the question regarding exemptions, you will find it out. It is really, really easy. And once you revise twice or thrice, you will be able to learn all those provisions very easily. Jayendra, story time we don't have actually because we are already crossed the time limit. Ma'am, you want to ask something?
No, sir, I just want to tell to the students, because as I seeing ki students, many of the student has not done the homework. So I just want to make them understand ki how much important is this to revise before your next session. It is very important to revise the topic which sir has already taught, and also do your homework properly, because if you are not able to solve the numerical, now what happened, you just learn in the class, you thought ki theek hai, it's okay, we understand the provision and everything, but when you actually try to solve the numerical problems, now then you understand ki okay, that provisions are keeping in your mind, or that is retained in your mind or not. So it is very much important ki whatever the homework sir is given, na, you take it seriously and do it properly. And in case you are not driving your answer correctly or you are facing any issue, sir is there, board of studies is there. So don't hesitate, don't shy. If you can be wrong in these classes, LVC classes, because we are here to support you. So it's better to make mistake here in the LVC classes rather than to make the mistake in the examination. So don't just take lightly to this homework or revision parts. So it is requested to all the students. Okay, students? So next time sir should get answer from all the students. Pooja, you want to say something? You have raised your hand.
Yes, ma'am. Ma'am,
Yes. Yes, Pooja.
I want to ask a question regarding section 54.
Yeah, tell me.
Ma'am, in case section 54, if may I speak in Hindi?
Yeah, no problem.
मैम ये जानना चाहती थी कि जैसे सेक्शन 54 के अंदर अगर लॉक इन पीरियड 3 ईयर का होता है और विद इन 3 ईयर अगर मैंने वो प्रॉपर्टी किसी को गिफ्ट दे दिया, या फिर जो सर ने एग्जेम्प्टेड जो 14 केसेस बताए थे उनके अंदर अगर हमने ट्रांसफर किया तो क्या वो मतलब ब्रेक होगा लॉक इन पीरियड? मतलब उस केस में क्या हम कॉस्ट ऑफ एक्विजिशन से लेस करेंगे? ये जानना चाहती थी.
Very good question, Pooja, because if firstly you have to see what is the condition. If the condition is only transfer, then as per section 47, there are certain list in which the transaction is not considered as a transfer. So if you are doing any of the things, then it will not be treated as a transfer.
तो इस केस में ब्रेक नहीं होगी, राइट मैम?
नहीं, अगर that 47 की लिस्ट में if you are fulfilling all the condition, whatever is there in the conditions, if you are fulfilling that condition and it is not transfer as per section 47, then there is no violation.
Okay, ma'am. Thank you, ma'am.
Okay. Student, do you have any query? Anyone? So student, that next Tuesday will be your last class for capital gain. Then sir will be starting income from other sources. And after that also there will be one problem solving. So practice all the questions, revise all the provisions so you can take the more and more benefit of the problem solving in all these classes. I guess we can conclude the session, sir, now.
Yes, Manishji, we can close the session. There's no more query in the chat box also. Good night, ma'am.